take it across to Madan Sabnavis. He's, of course, the Chief Economist at Bank of Baroda, joining us on the show. Madan, hi, good to be speaking with you. This morning, at least, it was a positive news to begin with, wherein Fitch has reaffirmed ratings on India. But the big question everybody is asking is how Modi 3.0 is going to be different from Modi 2.0 in terms of the GDP expectations, in terms of the reforms, etc. What's your own expectation?
No, in fact, my view is that nothing is really going to change. The Indian economy is already positioned quite well in terms of GDP growth, in terms of inflation coming down, and in terms of the external sector being very resilient, very strong regulatory structure on the financial side, and the banking system doing well. So these are the kind of preconditions which have already been met. So unlike in the past, where there was a certain kind of a crisis-like situation in the economy, like 1991, for example, if we go back around 35 years, we don't have such a situation today. In that way, we are in a kind of a sweet spot where the economy is doing very well. And all that's required from the government right now is to hasten the pace of growth, hasten the pace of reforms. And from what we have heard about the coalition partners, I think they are like-minded when it comes to things like going digital in terms of being pro-markets and industry. So I don't really see any kind of a contradiction as far as the ideology is concerned among the partners in this particular coalition. And it should be business as usual for the government. I don't see any serious impediment internally on account of any particular policy formulation or implementation due to a coalition and the BJP having less than a majority on its own.
Right, Madan, good afternoon. This is Vinny joining in the conversation as well. While, yes, you're saying you're not expecting much of a change there, but don't you think maybe some bit of a focus is what they should be putting on in terms of where the consumption story lies? And that would also be a play more than the infra that they've been focusing on, the Capex cycle that they've been focusing on. Along with that, even a consumption story is maybe a part of their plan going forward. Is that a possibility?
No, actually, let me put it this way. See, one is they're talking in terms of a coalition government, whether there would be any kind of change in stance in terms of policy. Now, irrespective of the fact that whichever government came to power, I think the two primary objectives in the near run, when I say near run is maybe the first year or so, would be to make sure that consumption revives and private sector investment also becomes more broad-based. So I think these two themes are going to play out in terms of the government policies, especially when you're talking of the budget, because that's the only place where you're able to make a difference in terms of giving certain tax concessions, which is something which is required from the point of view of spurring consumption, or anything on the expenditure side. So on the expenditure side, like having a PLI-like scheme for the SMEs is something which could help to revive investment. So these two themes are definitely going to dominate the government's economic agenda for the next year for certain. And probably this is something on which they should be more focused for the next 2-3 years, because I don't think consumption or investment is going to revive overnight. It's going to be a very slow process. So this said, as far as Capex is concerned, I think that will carry on at the normal pace. So I don't think there's going to be an issue out here. More important is going to be the absorptive capacity of the economy. So it's one thing to say that the government wants to spend on capital expenditure, primarily it's on roads and railways. But as we have seen for the state governments, all of them have fallen well short of the targets, essentially because you don't have those kind of projects to be financed. So therefore, I think a trend growth in capital expenditure, a revived focus in terms of consumption, probably rationalization of the GST rates, maybe a few tax concessions given at the household level is something which could definitely help.
Right, and we do have the MPC policy meet also, Madan, this week. Anything on terms of that expectation? What should one be watching out from the RBI policy front?
Okay, I think that is fairly more straightforward because, again, given the fact that GDP growth has come at 8.2% compared to 7.6%, which was the earlier estimate, it means that growth is definitely not a concern for the Reserve Bank of India, and the focus can continue on inflation. So in my view, I think there will be no change in the repo rate or even in terms of stance. What would be, of course, be of interest is to see whether the RBI has any change in the forecast on GDP and inflation. At GDP, we would be expecting some kind of an upward revision. But on inflation, I think it will be more of caution because the year has just begun. We know that there is a heat wave on, which has caused prices of vegetables to go up. We also know that the monsoon is going to be good. So prima facie, it appears there shouldn't be an issue. But then one never knows because having a normal monsoon by itself may not connote much. It depends upon the arrival, the spread across different regions, across different crops, and finally the departure. So I think it will be a very nuanced view taken by the Reserve Bank of India or the MPC for that matter when it comes to altering interest rates. I think they would wait and watch, see how inflation really pans out. We are currently just about below 5%. In July, August, I think the numbers are going to come very, very comfortably below 4%. So I think that may probably be one kind of a trigger. But I think more important is to see whether inflation, food inflation in particular, is under control before they take any view on lowering the repo rate.
So it's fairly straightforward, you're saying, with respect to the expectations from RBI. So let's get back to politics and the impact there. I know it's a bit premature, Madan, but do you think this entire, weaker political mandate per se might push back the expectations of a favorable view from the global rating agencies in India?
No, I don't really think so. I think the reason, as I said in the beginning itself, is that the two major coalition partners are also fairly progressive. That is, if you go back to say that when these particular leaders were heading their own states, I think they were very progressive when it came to A, reforms, B, in terms of digitization. I think these are the two things which they have taken on. And we have also seen that there's been a major thrust which has been given to industry. So trying to attract investment. For example, if you look at Andhra Pradesh, I think it's been very, very positive when it comes to industrial investment. So therefore, I don't think the rating agencies or any of the external agencies are going to be apprehensive about what's going to happen on the policy front because we don't have a major dominant party in power. And I think that the BJP itself has done a very good job so far in 10 years. And I think there will be a common agenda which will be agreed to. And I don't see there would be any major contradictions. This said, let me also put forward this issue that one of the major problems which we have had in terms of reforms for the last over 5 years, where there's no easy solution, is agriculture. So, but I think that is something which will have to be discussed, not just with the coalition partners, but also with the entire stakeholders which are involved before there can be any action. Because that is one major reform, which I think is something which would be high on the agenda of the government in this particular term.
Right, Madan, thank you so much for joining in with us this afternoon on ET Now, as well as talking to us about politics, economics, what should we be expecting from the NDA government in 3.0. But yes, on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more updates after the break.
If you like this video, then like, share and subscribe to ET Now.